Okay, hello everyone. It's William Du Bois here again, and today we're going to be talking about who trades Forex is going to be our topic for today. And I'm doing this on behalf of pipjunkies.com, of course. Now, this video itself, a majority of the information within this topic is kind of long and pretty boring to explain, and me talking to you about it over here will probably make you fall asleep. So most of the information will be below this video on the website in text format for you guys to read. This information is kind of difficult to say. I mean, it's knowledge worth having in regards to who trades Forex, but it's not necessarily completely crucial. And I'm sure I'm going to get a bit of snack for saying that, but it's really overall, in my opinion, not too important. So anyway, we're going to be talking a little bit about market structure. Now, first example we're going to give you here is going to be the market structure of the stock market, which most people are hopefully aware of, and if not, it's very easy to understand. So it's a centralized market. So basically what that means is you've got one particular spot of interest. So the box in the center there could be the London Stock Exchange, the New York Stock Exchange, whatever it may be. And then you've got buyers and sellers. Okay, so they determine the price, and then you've got buyers and sellers obviously buying and selling on a particular thing. Now, very simple. Whereas if you compare that to Forex, you can see here it's what's called a decentralized market, and there's many different aspects here. You can see they're all entwined together. So we've got individual banks, individual brokers, we've got the market makers, and then the individuals such as you and myself, all making up part of the market, as opposed to just having one centralized spot. Many different places can provide many different prices, and it's not necessarily fixed. So you can see here the different structure. Now, this can have benefits and negative aspects to this, but generally speaking, it's mostly positive. And once again, the majority of that information will be included below. So you can see here we've got different banks. We've also got the EBS, Reuters, the different brokers. We've got market makers and the different banks, and then the speculators themselves would be on the outside. Now, we actually have a hierarchy chart here as well to basically explain who the major players are, so to speak, in the particular market. So at the top there, you can see we've got the major banks. Then we've got the EBS. These are basically, as you can see, they're electronic brokering services. Now, they're the guys who, a majority of the software, the prices will be going through. So you've got Reuters on there for an example. Then below that, we've got the medium-sized and small banks. Okay, then below that, we've got the brokers, hedge funds, commercial companies, retail market makers, and then below that, which is the category that we fall into, unfortunately, we're all going to be at the bottom of the hierarchy, and that is retail traders. Now, being at the bottom of the hierarchy is not necessarily a bad thing, and once again, we'll be covering that in a lot more detail, but that's why it requires us to be a lot smarter. It requires us to be ahead of the game, so to speak. We need to be able to adjust to what the big guys are doing. And like I say, there's pros and cons to that. So that's pretty much it with the market structure. Like I say, I know that this is very brief, but please read the information below this video, as it will include a lot more information in regards to this. And as always, guys, have a nice day, and thank you.